Hello and welcome to the Friday market update. Well, it's a game of chicken. Who is going to win? So the Trump tariffs shake up the market, and are we headed for a recession? It was really a great week for mortgage rates as they dropped down almost 0.25%, approaching 6.5% for a great borrower conventional loan. But better yet, FHA and VA rates, they dipped below 6% for the first time since October 2024. Now, that's a huge psychological win for buyers and a big nudge off the fence. So what's behind the dip? So markets were shaken this week by the announcement of the new Trump tariffs, and global stocks took a nosedive. With uncertainty looming, the Wall Street investors did what they always do. They ran for cover. That flight to safety means big inflows into the U.S. Treasuries and mortgage-backed securities, which helps push down mortgage rates. So it pushed them down lower. But don't get too comfortable. This is shaping up to be a full game of chicken on the global stage. And right now, countries around the world are pushing back against the U.S. tariff plans. They're flexing their tiny muscles that aren't as big as ours and hoping to avoid blinking first. But here's the thing. The U.S. consumer is the 800-pound gorilla in the room, and most other economies are more reliant on us than we are on them. Still, if other countries cave and negotiate a resolution, this brief moment of uncertainty will vanish. It'll go away. And so will these lower rates. That flight to safety would reverse course and head back into the stock market, and interest rates could climb right back up. So we've seen this before. Just like last October, when rates dipped down close to that 6% level, buyers had a chance, but many waited, hoping for even lower rates. And by January, we were back above 7%. Those missed opportunities cost thousands of dollars, not only in lower mortgage payments, but in higher home prices for these buyers who still may be sitting on the fence. So here's a play. Reach out to your potential buyers right now that are sitting on the fence right now. Get them off that fence and look at them and say, you can take this opportunity now to get into the market. Let them know this window may close just as fast as it opened. The market doesn't wait for anyone. It changes daily. If rates drop further, we'll see the herd mentality kick in. More buyers, more competition, and likely higher prices. This might be the moment your clients were waiting for. So help them act before the herd catches on. So quick nugget to ponder. What happens to home values if we actually do go into a recession? That's the talk about the tariffs. Do they go up or do they go down? Now, 7 of the last 8 recessions, home values actually went up and then climbed up considerably after the recession. And the exception, the Great Recession in 2007, which had a completely different set of circumstances. So why do values go up in a recession? Interest rates go down. So when interest rates go down, it makes it more affordable for the home buyer, and they make the home prices go up. So food for thought to provide to your buyers. So keep winning. I hope you have a fun weekend, and we'll see you next week. Gaylord out.